It's a brand new week. A very good afternoon and welcome to the Monday edition of Market Views. A minute after 2. Thank you for tuning in. My name is Lungelele Makagola. You can watch us on our YouTube page, Eswatini TV. With a decrease of interest rates by the Central Bank of Eswatini and a recent increase in home loans, there is an indication that people are either looking for property to buy or they are constructing their own. Today, economist Sanele Sbia will give guidance on different aspects when it comes to buying property, which includes making the right decision between buying property in urban areas or buying it on Eswatini nation land. He'll also share an insight on how he believes the property industry will look like in the future. And in our leading story today, the Minister of Commerce, Industry and Trade, Manxuba Khumalo, says over 850 Emaswati are employed by Lashe Care by Tolerim Group. Lashe is a company that is situated at Ngwenya. And our final segment, Spear will connect again for today's financial markets. For now, let's take a look at our first story. Over 850 Emaswati are employed by Lashe Care by Tolerim Group, which is situated at Ngwenya. This was revealed by the Minister for Commerce, Industry and Trade, Honorable Manxuba Khumalo, during the tour of the factory with the ministry's portfolio committee in the House of Assembly.
There has been a concern raised by the Auditor General that government paid up to 40 million emalangeni for property that was valued at 2.5 million emalangeni. The Minister for Commerce, Industry and Trade, Honorable Manxuba Khumalo, says government bought the property with 2 incomplete structures, which the owner proposed to sell to government at 83 million emalangeni, but it was negotiated to 43 million emalangeni.
Lendzawo lengale inemafemu lamabili langakapheli njengoba siwabonile lo mnikati wakhona bekathi angasengisela nga-83 million kepha ke thina sanegotiate sagcina siwathenge nga-40 siwathengelani-ke siwathengela lokuthi laba bakalalash bathi bangathanza lokuthi buthe madvute bangene basebente khona kungako nje besifuna i-support yeparlament ukuthi i-understand le project. They have employed 850 people here, and the government of the Kingdom of Eswatini has just bought 2 unfinished factories just adjacent to where we are today for 40 million emalangeni, and these 2 factories will be used for the expansion of this particular project. We have commitment from them in writing that by this time next year, when those factories are finished, they would have increased their numbers to 1.5 people. And in 2026, they would have increased to 2,400,000 people because we are really trying very hard to make a difference in this particular community.
The factory manager at Lashe Care promises sustainability of the project, ensuring that more Emaswati get employment in the long term.
So we are expanding more as South Africa and Mozambique sales is improving in the market. We're going to appoint more workers and will grow.
Chairperson of the Portfolio Committee in the House of Assembly, Masipula Mamba, says they are satisfied with government's decision to buy the property.
As politicians, we want value for money. That is what we are here for. Since there's been some controversy that government bought land that was worth 2.5 million for 40 million. So we wanted to ascertain ourselves with the value of the money. And we have seen that value for money is tested by the number of people that are employed here. Already we have seen over 800 people employed, and there is a probability that the number could increase to even 1.5 by 2026. So we will encourage IPA and the commerce to do whatever they can to support this firm.
Mochane, Member of Parliament, where the firm is located, Wilton Kambule, says the arrival of the firm has seen a number of residents from the constituency getting employment.
Kuta kwale msebenzi lo wale factory kwanyalo siva ukuthi icashe 850 abantu, so nakufakwa lelenye ifactory batawengete abantu loko kusho ukubenefitha kwenkundla ngoba siyakucela lokhu siyagcizelela ukuthi abantu labekuqala beqashwa akube ngilabenzayo ngoba ngiyona le benefitako.
The Ministry of Commerce, Industry and Trade says in 3 years, Lush Hair Care would have hired about 3,000 eMaswati. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa, Ngwenya.
The Ministry of Commerce Industry urges owners of small-scale businesses to make use of the Small-Scale Enterprise Loan Guarantee Scheme under the Central Bank of Eswatini. The Director of Small and Medium Enterprises, Mluleki Dlamini, says the requirements have been relaxed to ensure more small-scale businesses are able to access the scheme.
Information sourced from the Central Bank of Eswatini states that the maximum loan under Small-Scale Enterprise Loan Guarantee Scheme is 1 million emalangeni. The guarantee scheme covers 95% for startup businesses and 85% for existing businesses, with the applicant required to contribute 5% and 15% under startup and existing businesses, respectively.
The Small Scale Enterprise Loan Guarantee Scheme is a facility that encourages participation of financial institutions, namely commercial banks and non-bank financial institutions, to increase lending to small-scale enterprises in the kingdom by reducing the financial risk that is taken by these institutions. It further provides financial resources to financial institutions for specific development purposes, to actively support local entrepreneurs, many of whom have no access to commercial credit due to lack of collateral. So basically this facility then provide some form of relief in terms of collateral, which basically is meant for businesses with a turnover not exceeding 8 million per annum. And so the facility provides 75% as collateral to already existing businesses and 95% for startup businesses, whereby then they only provide a contribution of 5%. So basically, this scheme ensures that businesses are able to upscale their businesses and also have access to finance for their development. So basically, the scheme is with the Central Bank of Eswatini. It is a guarantee whereby a loan needs first to be accessed and approved through a commercial bank or a non-bank financial institution. The scheme has over the years evolved, and it did not start with the 75%. At some point it was 50%. Then as we are trying to make it more accessible and more efficient, we then increased the percentage to 75% and 95% respectively. So basically, this is a facility that will ensure that we see more businesses benefiting through access to finance and also the partnership between government and private sector.
The youth between ages 18 to 35 benefit under this scheme, and the guarantee covers 98% for startup businesses and 95% for existing businesses, with the applicant required to contribute 2% for startups and 5% for existing businesses. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa, Mbabane.
It's 10 minutes after 2, and that's it for our business news this afternoon. Thank you for staying with us. Let's go for an ad break. We'll be back shortly.
Renewal of TV licenses for 2024 is now open. Here is a quick reminder. A viewer's TV license costs 180 emalangeni per device. Other accessories such as decoders and set-top box cost 50 emalangeni per device. For traders and repairers, TV license costs 300 emalangeni per business area. And now, to pay your TV license, use these following methods. You can use MTN Mobile Money with the number 76222000 or dial *007 *3 *7 hash. Or you can use Eswatini Imali. And And you can pay our TV license at any post office in the country. Another option is you can use any Nedbank branch using our TV license account number 1199004337. Don't forget, when paying for your viewers TV license, reference with your PIN at all times. And when paying for a retailer TV license, reference with your TIN at all times. For more information, call us on 7802-4543 or 34050163 or 34020879. And you can send us a WhatsApp message on 762222000.
Welcome back. You're still watching Market View. This is the Monday edition. Thank you for staying with us. With the decrease of interest rates by the Central Bank of Eswatini and a recent increase in home loans, there is an indication that people are either looking for property to buy or they are just constructing their own. Today, economist Sanele Esbia will join us to give us guidance on different aspects when it comes to buying property, which includes making the right decision between buying property in urban areas or buying it on Eswatini national land. He'll also share an insight on how he believes the property industry will look like in future. Very good afternoon, Mr. Spear. Thank you for joining us this afternoon. Has Eswatini embraced the culture of buying or even building our own property? What do you believe is the status of property industry currently? Is property market favorable?
Good evening, good afternoon, and good afternoon to the viewer. So when you look into the property market, when you look into new housing starts, you will see that Eswatini are actually trying to move into the property ladder for reasons being, when you're investing in property, it's one of those sectors in the economy that that seems to hold value regardless of the time, until unless you get to a bubble. So it's just one of those things that you need to make sure that you are always investing in a way that would insulate you from an ensuing bubble should we get to that point as a country. And one other thing that we've noted that is quite interesting when it comes to Eswatini is the fact that Eswatini are utilizing the availability of Eswatini nation land to develop, property that is what one would call lower sapula, basically that's a town property. So we are seeing that trend across the country. As you travel, you will see the structures that are popping up, while at the same time when you travel in almost all new townships and new developments, you will see that eventually there's the willingness to buy once a developer has developed, and we are seeing that people are also coming in just to buy pieces of land and to build their own property there. So it's one of those markets that is what one would say it is recession proof. Whether the market is in recession or not, it always holds that value. It's the value at which it is going to grow that usually just varies from time to time.
Yeah, without a doubt, construction of property brings much needed employment and economic stimulation. How does this benefit the property market?
So what we are seeing with that economic stimulation and all of those is the fact that when we build new properties, and if the demand is there, you see that the price that we can then sell your property at keeps on increasing by the day. The market valuation of that property increases because there's demand and there's new developments being built. But what that usually does, one thing that property buyers should look out for is, as a new development takes off, you find that a previous development that was once a to-go-to area somehow loses that prestige, and you find that the prices there do not increase that much. And it's the same situation that we are seeing with the booming of Eswatini. Before, Mbabane was the property area. It was the area in which one wanted to invest in terms of property. But with Eswatini now, you can see that the profitability is now moving towards Eswatini. But what this does, when there are these shifts in the market, what happens is it does open up space for new entrants into the market, for those people who want to buy property, but probably cannot afford that high-end property. So you find that those areas that still relatively good areas would now then sell at a lower price, and that makes it easy for people to enter into the property market and try to see what you do with whether you hold to sell or you hold to renovate to sell. There's always quite a number of options through which a Maswati can try and make money out of the property market. So we are seeing all of those movements. It's quite an interesting shift where we are seeing that now the markets are shifting towards a certain direction.
Speaking of selling your property, we are in a lot of debts, due to the current economic situation in the country. People are mostly selling due to financial pressure or even looking to downsize or because they are leaving the country. I read a report that very few are selling with a view to upscaling. And if this is true, how do we change from this mindset?
So what we're looking at in terms of the property market right now is it's actually we were in what we call a buyer's market, where the demand was a bit tardy there, was a bit nifty. So it was those people, the buyers tend to have more of a say right now. So that's what makes it a bit difficult for people to try and just survive these tumultuous times. And remember that we just from COVID, when interest rates were very low, where interest rates were around, you'd get property around 9%. It was prime plus 4 or 5. It would put you around 9% or 8%. So property was very much affordable then. But now we came into this normalization drive with the interest rates going up. So people are now trying to sell just to try to make ends meet. But the beautiful thing that we are seeing now is once the interest rate starts going down, you should expect to see the property market also respond and react to that change and to that stimulus as well. So we should expect to see property sales picking up as we enter into a low interest rate environment, because it's more supportive of property sales. And then the issue of buying to upscale and buying to and selling to probably just try to breathe. It's purely because of those issues, Lulu, where in that interest rate environment and people were probably overstretched. Yet at the time, you were not overstretched because the interest rate was quite affordable. So you could comfortably afford your car, your house, simultaneously. But now with the high interest rate environment, it becomes a tad bit difficult to afford both your house and your car and still live comfortably. So that's why we're seeing people offloading in terms of property just so they could breathe. And then now with the changes in the interest rates, we should expect to see that normalizing and stabilizing. And as we see wage growth also picking up, we should expect to see a trend in either new entrants into the job market, buying new company, new property, and upscaling. So those are things we should be looking into, Lulu. And also the issue is with Eswatini, it's quite an interesting dynamic. It's quite an interesting market dynamic, which we're trying to watch out and see how it's going to actually balance out. Like we said at the start of the program, in Eswatini, the regulations are such that you could now utilize your pension as 80% of a building loan in Swazi Nation land. And we know that in Swazi Nation land, all you have to do is just ponder for the land. So we are also seeing that interesting shift where people are now utilizing financial products available to them to also build in Eswatini Nation land, which then now brings into context an interesting dynamic in terms of our property market, where are we seeing titled property going in the next 10 to 20 years, as we are seeing this shift into Eswatini Nation land, which is not rateable, which is very cheap in terms of getting the land, and then you can build your very nice structure there. And if you look at our connectivity infrastructure in Eswatini, you could move from what one would call a rural area to an urban area in a very short space of time. So it's those dynamics that are in play here, Lulu. But the issue that we need to Eswatini to know is the fact that when you are in titled land, that is property that you can use as collateral, and that's property that you can use to grow your portfolio because it grows in value. The market value grows, while in Eswatini Nation land, we are not seeing those. But we are Eswatini, we are used to staying at home, and we are seeing those shifts. So it's one of those dynamics.
Yeah, just 1 minute, Mr. Spear, before we wrap up this segment. What's your advice on overpriced property? For instance, a property has been on the market for at least 90 days and has received sufficient exposure and still not sold. What advice would you give to the property owner?
So I'm not sure whether it's overpriced or we just do not have the market for it in Eswatini. One thing I always advise people when they want to buy property is looking at the economic dynamics of Eswatini. If you are buying with the view to sell, make sure you're buying property for below 2.5 million, more especially if you are going to be financing it with a bank. Because when you look at the economic dynamics and the affordability criteria, there's only a handful of people who can afford property above that threshold. So that's the thing that we need to be quite careful about when you're buying property, knowing the market, knowing whom you can sell it to when you eventually want to sell. My rule, as it were, is I stay away from anything above 2.5 million because I know that's going to be a tough sell. It's not an issue of the property is overpriced. It's an issue of do we have the market for it? And if you do have the market for it, most likely that's a person who would, give or take, build their own house. If I have 2.5 million to spend, why not just build my own house to my own specification, to my own liking, and all of those things? So people need to be aware of all those dynamics, Lulu. Always make sure that when you are buying property, you are thinking ahead to a situation where you might have to sell it because you don't know what tomorrow holds. And you need to ask yourself, if I were to sell this property today, will I get a person to buy it?
All right, thank you so much, Mr. Spear, for that advice. In just a few seconds, he'll be right back for today's financial markets.
Ujala masada mahle kunakho lesa.
Sabatandi ukuthi njengalokhu
Sivile sive sikhulume.
Welcome back. This is our final segment of the program. Mrs. Spear joins us again for today's financial markets. Mrs. Spear, good afternoon once again. Let's start off with international markets. U.S. markets, I see the S&P 500 is doing quite well today. Take us through today's international markets.
Thank you, Lou. So when we're looking at the international markets, we can see that it's actually an upbeat mood following the U.S. data that came out on Friday. We saw that the United States economy added 100,000 jobs more than it was expected. That was when the non-farm payroll data for October was released last week. So what we are seeing there is we're seeing markets continuing to ensure to make those those gains in terms of where we're going. But what this has brought into play now, Lou, was the fact that when the Federal Reserve Bank cut interest rates by 50 basis points, the thinking that it sent to markets was, the economy is not doing well. But now with the jobs numbers that are coming into play, that means the Federal Reserve Bank might have to now tone down on the rate at which they are cutting down the interest rates to ensure that we keep inflation at bay. And we are seeing the geopolitical tensions also coming into play. We've seen Iran being dragged into the Israel conflict, and that markets are actually taking into consideration and looking at it through that risk premium and seeing whether the war in Israel, between Israel and Palestine, will actually explode to the overall region. So that's what markets are looking out for, but relatively an upbeat mode in the US, with the S&P 500 expected to grow even further. But we also are waiting earnings reports to come through this week, and that numbers might, when the earnings data comes through this week, it would either confirm that markets should be doing, it should be at these higher levels, or it should tell us that, markets are overpriced or not. So we are looking out for that this week, Lou. And then moving into Europe, what we are seeing in Europe, again, an upbeat mode in London, as we are awaiting the Chancellor to come up and table her budget, I think sometime this week, to table a budget. And then again, what we're seeing though, within the Euro region is the fact that Germany is actually trading on the red, but still on a high level. That's purely because the growth numbers coming out of Germany are showing that the German economy is going to contract by 0.2% this year. And do you remember, Germany is one of those stories we've been talking about, say, where they need new sources of growth, and without those new sources of growth, the German economy is actually expected to contract, and we are not seeing anything positive come out of on that front in terms of measures to make sure that we get the economy up and running in Germany. So then when we are moving into China, into Asia, what we are seeing there in Asia is, the Asian markets are doing relatively good. Actually, not relatively good. They're doing very well. We are seeing the Nikkei really climbing back on the 39,000 mark, really approaching that 40,000 mark, which is something we saw a previous months ago. We're hoping that the markets will get back to those levels. And if the bullish markets are sustained, if the data continues to sustain a good case for a bullish market, we should expect to see Japan get back to that 40,000 mark. The Hang Seng there in Hong Kong is still maintaining those levels. And, China, again, still the Shanghai is still above that 3,000. What we are hoping to see now there is, as we see more of this stimulus coming to affect the market, we are just waiting to see if demand is really going to be affected by this stimulus that the Communist Party or the Chinese government has actually pushed into the economy. So that's what markets are pricing right now. Yes, the effects of that stimulus are going to wither off, and then we want to see whether now it's going to affect the real economy or not. Coming into South Africa, what we are seeing there is, yes, the Johannesburg Stock Exchange remains upbeat, but still in that cautious level as we are waiting for inflation data to come out this week, and we are just waiting to see how. We're waiting to see sentiments coming out of the Federal Reserve Bank in terms of the margins of those interest rate cuts, Lou. And then in the domestic markets, we are seeing that we are still at that very same level, 497.41, with regards to Eswatini Stock Exchange. Nothing much has shifted there. And then when you come into commodities, what we are seeing there is, given what's happening in the Middle East, we're seeing the price of Brent crude, just on the touch of that 80 mark. And we should expect it to go into that 80 mark as we continue to see that instability build in the Middle East, until and unless we see some signs of de-escalation, not the de-escalation through escalation that Netanyahu has been selling to the whole world. We want to see real de-escalation within the region, and then probably the price of Brent crude would then somehow slow down a bit. When we are looking at in terms of gold, there is, gold now is gaining marginally, purely because markets are waiting to see how how the interest rates story is now going to change. Are we going to see the very same vigorous, or we are now going to see a marginal cuts? And the numbers that came out on Friday are actually indicative of the fact that we are now going to see marginal cuts in terms of the interest rates. And then moving into currencies, what we are seeing is, the Lilangeni is relatively weak against all major currencies, it's relatively strong against the European and the euro and against the dollar. That's purely because we are waiting to see in terms of the interest rate cuts how much the bond yields are going to give to allow currency to actually pick up in the US. So that's what markets are pricing in today, and it's that instability that we are seeing priced into the dollar lilangeni exchange rate. And the same thing across Europe. What we are seeing there is, though our investor sentiments have improved, but there is still that bit of worry about whether we should expect the European economy to grow the way we're expecting it. And we are seeing the impact of those stimulus packages that the Bank of Japan is pumping into propping up the yen, also really just pushing it up against the lilangeni. Thank you.
All right. Thanks so much, Mr. Sbia. Unfortunately, yes, we've run out of time. Thank you for that analysis for today's financial markets. We've come to the end of our program. Thank you for tuning in. You are watching the Monday edition of Market View. Join us again tomorrow at exactly 2 p.m.
That is people who were held hostage and have been returned from the Gaza Strip, people who still have relatives being held hostage in the Gaza Strip, people whose family members were killed that day, people who were injured themselves that day but managed to escape with their lives. Ordinary civilians for whom all of this is a living issue. In fact, I would say, you know, there is no post-trauma here. It's still really, Israel is in the trauma of October the 7th. And I think that's partly because there are still 100 hostages being held inside the Gaza Strip. Israel's Prime Minister estimates that 50 of them are dead, but that means that could be as many as 50 still alive. And until they come home, I don't think Israel will start processing this trauma.
Absolutely. And Iris, we're going to come back to you in just a moment, but first we're going to listen to the daughter of one of the hostages who was killed.
I would like to promise all 101 hostages, on behalf of all of us, all the people of Israel, that we won't stop fighting. We won't stop making their voices heard. We won't stop fighting for the most basic thing, that they come back safely as soon as possible.
Iris, as you were saying, the weight of these hostages still being held in Gaza is still weighing very heavily on the minds of many Israelis, not just today, but throughout the year. Tell us a bit more about the impact of that still 1 year on.
It is extraordinary when you think of all the events that have happened. Nevertheless, the trauma of that first day is so strong here. You know, I feel personally as a journalist that what I have been doing is marking two sides, sorrow on both sides of such depth, two sides bringing each other to their lowest point ever in all the years that I've been covering this conflict. And last night I watched one of the Israeli TV channels that had a moment-by-moment, a ticker going at the bottom of the screen with every minute from 6:30 when the first rockets came across and the gunman not long after. And, you know, I was here. I've been covering this story every day since then, but I was so busy on that day that I haven't gone back And it was extraordinary to watch and to realise that people were calling into TV stations because they weren't getting any joy when they called either the military or the police. And you see them calling the TV stations because they know a journalist there, and they say something like, please, we think we're surrounded. Now they're in our homes. Then they start whispering. Now they're definitely in our homes and they're armed and they're starting to burn this place, and we don't know if it's safe to jump out the window. And that's, a public exchange on television, and that's from 8 a.m. in the morning. And there wasn't any real rescue for many of them till that evening. So they had to endure by themselves, unarmed as best they could, many killed, as we know, and many taken hostage. So I think all of that is very live for Israelis. And really, I do feel that there won't be a reckoning. By the way, there hasn't been a national reckoning. There hasn't been a commission of inquiry. No state inquiry set up even. The same government is still in office. The same government that hasn't really accepted responsibility or its part. Very happy to blame the military and the intelligence services, not taking responsibility as politicians for what they oversaw. So all of this together means that Israel is still, I think, damaged from that day.
France 24's Iris Mackler in Jerusalem. Well, this October 7th, of course, also marks a year of war in the Gaza Strip. The Palestinian territory has witnessed enormous human suffering and unprecedented destruction. Our Karis Garland takes a closer look at the conflict by the numbers.
After a year of war, an ever-mounting death toll, and a narrow strip of land that's been laid to waste. On October 6, Gaza's health ministry said at least 41,870 people had been killed and 97,166 injured. It says more than half the victims are women and children. While recognizing blind spots and weaknesses, Human Rights Watch says the ministry's figures have proven to be reliable. The United Nations estimates 1.9 million people in Gaza have been displaced at least once. That's 90% of the population. Many now live in tents given the sheer destruction. UN satellite imagery from September showed more than 65% of structures had been damaged. That's some 163,700 buildings. Gaza City in the northern part of the Strip is the most impacted, with more than 36,000 buildings damaged. A satellite assessment from July estimated the war had generated about 42 million tons of debris. That's 14 times more than all of the debris produced by the other conflicts in Gaza since 2000.